Hey everyone, welcome back to Corporate Decoder, the place where let's just say, we try to make sense of the corporate world's little secrets. And today we've got a fun one. It seems like PERRIGO Company PLC might be cooking up a strategic review, and knowing them, there are numbers and whispers we need to unpack. Before we dive in, if you dig getting the real story behind corporate filings, hit that subscribe button. And for those who love to debate these insights, our Discord community is waiting, linked right below. So, PERRIGO Company PLC, a name you might know because they're big in over-the-counter health and wellness products. Think of all those things you grab when you need a quick fix for a headache or a cough. They've just dropped a report, and it has got a couple of things going on that are definitely worth our attention. The main event is around their latest earnings for the third quarter of 2025, but there is also a hint of something bigger brewing with their infant formula business. Let's cut straight to the chase because who has time for all the corporate jargon? This report is all about what is happening financially, and they're talking about their results for the third quarter that ended back in September of 2025. Now, they're doing something a little fancy here, which is to provide what they call non-GAAP financial measures. Basically, they're giving us their own version of the numbers, adjusting for things they feel don't show the true picture of their day-to-day business. They say this helps compare things better over time and with other companies. When they talk about these adjustments, one of the big ones is amortization expense. Think of this as what they're paying off for things they bought, like brand names or patents, that lose value over time. They're also adjusting for things like unusual lawsuits, costs to restructure their business, and charges related to buying and merging with other companies. They're also looking at things like foreign currency translation movements. Looking at the 3 months that ended in September of 2025, they've adjusted their numbers for all these special events. They do the same for the same period in the previous year, which was September of 2024. They also give us the picture for the 9-month period ending in September 2025, comparing it to the 9 months ending in September 2024. Now, why do they go through all this? They say it is to give investors a clearer picture of their real business performance. They want you to see the underlying trends, not get bogged down by one-off events. They use these adjusted numbers themselves to plan for the future and figure out how well each part of their business is doing. It's like they're saying, look past the messy bits, here is what we're really doing. Okay, so let's peek at what is actually listed and traded. PERRIGO has its ordinary shares trading on the New York Stock Exchange under the ticker symbol. PERRIGO, they also have a few different types of bonds or notes as they call them, like their 4.900% notes due in 2030, the 6.125% notes due in 2032, and others. These are all traded on the New York Stock Exchange too. Seeing these different debt instruments listed gives you an idea of their capital structure, how they're financing their operations beyond just selling products. Now, for something that really grabbed my attention, under item 7.01, they're talking about regulation FD disclosure, which is all about making sure important information is shared fairly with everyone. And what did they share? They announced they are starting a strategic review of their infant formula business. This is a big deal. When a company decides to review or potentially sell off a part of its business, it can mean a lot of things. It could be that this part of the business isn't performing as well as they hoped, or they see better opportunities elsewhere. This review is a signal. It means management is looking critically at this segment. Are there challenges they can't overcome, or are they seeking to free up capital to invest in areas with higher growth potential? This kind of review can lead to significant changes, including divestitures, which means selling off that part of the company. It is a strategic move to refocus or to shed underperforming or non-core assets. Finally, they include a cover page interactive data file. This is basically a standardized digital format that makes it easier for computers and analysts to sift through the financial information. It's part of the move towards more transparency and accessibility in financial reporting, allowing for quicker analysis of their filings. So, what is the takeaway here? PERRIGO is reporting its quarterly numbers using its own adjusted figures to highlight operational trends, which is fairly common. But the real headline is their strategic review of the infant formula business. This signals a potential shakeup, and it is something investors will be watching very closely. It suggests that this segment, while part of their overall operations, might not be seen as a key driver of future growth in its current form. They might be looking to streamline their portfolio, focus on their core strengths, or potentially fund new initiatives with the proceeds if they decide to sell. This move could redefine PERRIGO's future direction. What do you think this strategic review means for PERRIGO? Are they shedding a problem child? Or a future superstar? Let us know your thoughts in the comments below. If you found this breakdown useful, give us a thumbs up and subscribe for more deep dives into corporate documents. And don't forget to join the conversation on our Discord channel, linked in the description. Thanks for watching, and we'll see you on the next Corporate Decoder.